Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And this is a special edition technical analysis commentary for today, the 13th of April 2025 on E-mini S&P futures. This commentary is a follow-on to my earlier video commentary made on the 7th of March this year and a supplementary one to more recent videos made on the 4th and 6th of April. So why have I decided to make this supplementary video so soon after my previous ones? Well, I still think the reason is fairly obvious. The strength and depth of the fall, followed by the aggressive recovery, has prompted me to make this video commentary and to see what next will be on the horizon. So let's look at the daily chart. So, as I said in my earlier videos, we had a mid-February to early April bearish halfway hesitation, which reached its downside target in the 5200 zone, followed by an easy follow-through lower down to the 50% Fibonacci line, with the October 23 to February 25 move at 51.45. Prices exceeded on the downside even this follow-on lower, and I'd drawn a bright red acute bearish Andrews pitchfork for the February to March action to try and help gauge the market's bearish angle of attack. Our prices even exceeded this, as last week we saw even this breached on the downside, with prices pushing below the bright red lower time, currently at 49.66. However, though we pushed below this on the early part of last week, a number of factors and features showed themselves and halted the immediate decline, or caused a pause in the heavily overt bearishness. These were, and these are in no particular order, they still are: 1. A 2-day bullish meeting lines pattern, immediately countered, but featured 2, also prompting a combined key reversal up and bullish engulfing pattern that ended up as being part of feature 3, a 3-day horn bottom. Now, the recovery was also prompted by significant feature 4, which is the strong support of the 50% Fibonacci line of the October 22 to February 25 move at 48.34, and feature 5, the bright green March 23 to date uptrend, currently at 48.41. These last two stopped the market dead last Monday, and one should not underestimate them. Additionally, whilst feature 6, the purple October 2022 to date uptrend, was breached on the downside, we did not see a single close below it, not a single one. So this uptrend is still active, but at the moment only on the closing basis for now. Now the recovery midweek onwards last week was halted, unsurprisingly, by feature 7, the 50% Fibonacci line of the whole of the 2025 move at 55.01, as well as the broken and possibly in the process to be repaired previously mentioned bright red upper time, currently at 54.99 of the bearish Andrews pitchfork, and supported last Thursday on a closing basis by the bright red middle time, currently at 52.32. This 50% Fibonacci line and the bright red pitchfork, I would suggest, would be where to look in the immediate start of this coming Easter week. All this action has allowed me to draw a new feature 8, a bright pink October 23 to February 25 bullish Andrews pitchfork, with a nearby overhead pink middle tine, currently at 55.87, as the closest tine to the market. I would suggest this bright pink pitchfork, along with the various Fibonacci lines for 2025, the previously mentioned 50% Fibonacci line at 55.01 plus the 38.2 Fibonacci line at 53.43 and the 61.8 at 56.58. I would suggest these be key levels to watch for, along with the levels I spoke about in my earlier video, and they can be actually the same. And I quote, "The way lower is in 3s, 3 uptrends to look at and 3 50% Fibonacci lines to also watch, as well as congestion zones." I'll deal with the congestion zones first. They are at 49.03, 48.04 to 48.34, 47.39, 46.72 to 4700, 46.31 to 46.41, and 45.20. Some of these contain 50% Fibonacci lines, and the three to watch out for are the October 22 to February 25 move at 48.34, the October 20 to February 25 move at 46.87, and one that does not, well, it now shows up, and one that does not show up on my daily chart, and is probably the most important of all these anywhere nearby, is the key 50% Fibonacci on the March 20 to February 25 move at 41.70. This last one is a just-in-case scenario. Now on to the uptrends. We have nearby the purple 2022 today uptrend, that's currently at 49.88. The bright green March 23 today uptrend, currently at 48.41. And the key March 2020 to date uptrend, currently at 47.88. This last one is, as I say, a key uptrend, and the one to watch should the market approach it. End of quote. It's a bit long, but there you go. Now, I've primarily dealt with the near-term downside, so it's only appropriate that I look at the upside and also at the longer-term picture and reprise a couple of big pattern thoughts I mentioned in my earlier videos, which may show that the recent action is only part of a bigger, and I mean much bigger pattern. For this, I'd look to the longer-term monthly charts. Okay, so the first thing I'd like to talk about is for those who follow Elliott wave theory. Some who follow this might look at the recent action as a peaking wave 5, and that we may now see a further declining ABC, waves lower. I'm afraid I do not share this view, as I see this more as a peaking wave 3, if anything. The reason for this is twofold. Some may take the low of late 2018 as the start of wave 1, but I contend this is higher than the low of early 2020 and is not appropriate. Secondly, wave 3 should always be the longest, and clearly the current wave higher from late 2022 to 2025 is the longest. I do not put myself out to be an Elliott wave specialist. I just wish to add my commentary on such a scenario as we have today. Finally, I would like to look and reprise and add some thoughts to my earlier comments on the longer term picture, and I quote, "The question here is whether the at least 2023 to date action and possibly the 2022 to date action are part of a bump and run reversal top and or part of an ascending inverted scallop pattern. The first pattern is, as the name implies, usually seen as bearish, but the second does have the possibility to see prices revert higher. It is too early to tell on these right now, as after all we have not even completed the action for April, but it may be something that I will need to discuss at some future date and time." And that's the end of the quote. Okay, so I'll now revert back to my daily chart. The recent fall and halt, and at least temporary pullback up at the end of last week, does for the moment favour the idea of an ascending inverted scallop pattern. And so I'll give, in the spirit of my earlier features on the downside, 3 features to watch out for on the top side in case we see a further significant reversion higher. By the way, this is no way guaranteed, but just in case. The first is the gold long moving average, currently at 58.29. This is flatlining now and will shortly start to decline, so it is a dynamic level that needs to be watched out for and deserves watching. Secondly is the whole late March to early April area between 55.09 up to 58.37, and specifically towards the 58.37 area. The third is the most obvious one, and it's the all-time high at 61.66. This is an obvious one, but it still needs to be said. I believe that sums up the technical picture, both in the immediate times and in the longer term picture. Thank you for watching and listening. This special edition supplementary broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimers posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.